it is time for FOMO, of course, and we're talking Tesla, which is up about 1.8% on the session. A nice start to this week for a name that's down still about 31% here on the year. And joining us to discuss more on everything driving the price activity is Caroline Wood, senior markets correspondent for the network. So, Caroline, there's some analyst news, and then I also saw the fact that there's this fire and hire strategies, bringing back some of these fired employees. I mean, the truly a gift that is always giving is the news cycle of Tesla.
Yeah, we can always count on Tesla for headlines. Today, there's multiple headlines that could be driving the stock price. You talked about the negative note from Guggenheim. Pretty sure that's not what's behind these gains, but we will talk about that in just a second. But yeah, Tesla share is up 1.8%. It's been a rough year, but also just a rough May for Tesla. Shares are down about 6% in May, but they're snapping a 4-day losing streak today with this nice pop off the highs, but still up pretty substantially. Over the weekend, Tesla did introduce this promotional rate of 0.99% annual percentage rate on qualifying Model Y purchases. The deal runs between May 10th and May 31st. And it is important to note that that less than 1% rate is quite a bit below market rates. Previously, they were as high as 6.5%. So the hope is that drives volume in what's been a sluggish demand environment for EVs. So there's that going on. Meanwhile, you mentioned the fire and hire strategy. Bloomberg is reporting that Elon Musk and Tesla, they're bringing back some of the 500 workers from the supercharging team that they let go last month. So that's a Bloomberg report right now. Not sure if that's behind any of these gains today. And also, of course, the Biden administration is considering putting some pretty substantial tariffs on Chinese EVs. The Wall Street Journal is reporting that those tariffs are going to be hiked to 102.5% from about 27.5%. Those are supposed to be rolled out tomorrow and will target other industries as well outside of just EVs, just in terms of batteries and minerals and potentially solar. That could be left off the list, but steel, aluminum. So that could be having an impact as well. But I will say that those tariffs, seem to be more symbolic than anything, really meaningful, like, for example, the chip export ban that we've been seeing in terms of China, just because, China doesn't rely on the U.S. market for sales of its EVs. They don't sell here because even with tariffs at 25%, it basically wipes out any potential profit. So we aren't seeing any weakness in Li, NIO, XPeng, BYD, on the heels of this report. They did see some weakness last week, so that could be why we're not seeing anything today. In fact, we're seeing some pretty, strong green arrows for the U.S. listed shares of those companies. So could be giving Tesla a boost as well. And then we talked about, or you mentioned that Guggenheim note, they reiterated their sell rating on Tesla. They have a $126 price target, which is, Tesla shares are currently, as you can see here, around $171.50. The analyst there says, all else equal, we would expect U.S. Model Y inventory to decline from current record levels. Note, with April sales data now collected for most countries and regions, we believe current quarterly deliveries are tracking well below our 440,000 estimate. So continuing to keep that bearish rating, but doesn't seem to be impacting shares today.
Caroline, in our last segment, we had a meme stock Monday. We're going through some of those names. I think you could argue that part of Tesla, with the immense amount of options trading, has some of those elements to it, despite the fact that it's a much bigger company and, of course, more established and, of course, still a growing company. But it does have that kind of short-term trading dynamic to it as well. I'm looking at kind of some different time frames I look at. It's up over a 1-month time frame, but it's down on a 3 and 6 months. So there's not a lot of consistency with Tesla right now. It's just been kind of overly volatile and quick moving. And another thing to point that out, this is a name that no one agrees on. We had Guggenheim come out and say sell. I see Mirai Asset Securities says buy. And then we had Barclays and Wolf Research in a kind of a neutral or peer perform camp. Their price targets all reflect it. You got 180 in the sort of the neutral range, 126, as you said, for sell, and 225 for buy. So take your pick. There's somebody who's going to agree with something, and then there's going to be someone who completely disagrees.
Well, Alex, that 126 isn't even the lowest on the street. If you take a look, HSBC and Wells Fargo are at 120, JP Morgan's at 115, Roth MKM is at 85, and then of course Gordon Johnson, the ultimate bear, he's been on the network, he's at 22 and change for Tesla, so obviously not trading anywhere near that. And then just on the high end, you know, we have Dan Ives at 275, we have Barrett at 280, and Morgan Stanley at 310. So Tesla's been difficult. Obviously, unlike meme stocks, it has a lot of analyst coverage, but if you take a look, there are 51 analysts that cover the company. They're very split between really the buy and hold camp. 20 buys, 21 holds. There are 10 sells though, and a median price target of 177.50. So only about $6 upside from where it's currently trading. But this has been a hard one to really judge based on the analyst commentary and based on the ratings. Unlike, you know, an Nvidia where it's overwhelmingly bullish. Even when Tesla does well, you know, it's having a tough year this year, but even last year when it was having a good year, there were still quite a few bears or people who were kind of on the sidelines for Tesla. So it's always hard to kind of track this one based on just what the analysts are saying.
Because this name at one point last year was one of the highest rated of all of those in the S&P, and now it's fallen substantially. So I always look at some of these analysts and I'm like, you are so back and forth that it's difficult to be like predictive on their analysis because they've been wrong a lot of the time, frankly. But hey, I still follow all of them, obviously. It's just like take it all with a grain of salt, I guess, when looking at Tesla specifically. It's the most polarized name we discuss, I believe. But we'll leave it there. Great insight, as always. Caroline Wood, Senior Markets Correspondent for the network.